Hey guys, welcome back to the channel. The bulls keep on making a good move to the upside. We see that the markets close above the 50-day period moving average, which is this green line that you see here in the screen, and we're closing above it. So that's good news. That's good news. However, I want you guys to keep this in mind. We are still not out of the woods. We have a big event next week, which is the Fed meeting. All right. In that meeting, they're going to decide on the interest rate decision, whether it's going to be 100 basis point or 50 basis points. So pretty critical. The markets seem to have already priced some of that in because likely inflation has peaked based on previous months number and the fact that oil has dropped a little bit. And so who knows, that's still yet to be seen, but markets keep on pushing higher. So I take that any day, any moment. All right. So since our January high, right, it seems like we've already completed our three-wave decline, right? So corrections per Elliott wave guidelines or per Elliott wave rules all unfold in three waves. So we have the W, the X, and the Y of the intermediate degree to form the wave 2 of the primary degree. So we have ABC to W, three waves up to X, and ABC back to Y of 2. June the 17th in this count marks our low. So that is our wave count invalidation. That is our line in the sand. Anything above that level, which is 362.38, can be considered bullish, right? Anything below that level can be considered bearish, and we should be pivoting into our bearish count. Although, speaking of bearish count, we do have our bear interpretation, which I will show you guys in just a minute after we review our bullish count. That bear count is suggesting that we have, if I could label it with my fingers, this much room left for the bears to hold the ground, to hold the line, like they say, and then we move lower. All right. I don't know. It's looking very tricky. Okay, but again, maybe we fill this gap between the 400, I think it is. No, sorry, between the 395 and the 401. This gap highlighted in the blue box, and then attempt to break or hit at the very least the 100-day simple moving average, which is this line in blue. You guys can clearly see here that it is in confluence with this major resistance area. Okay, so that comes in around the 413 region, and then ultimately the next target to hit is a 434. Will we get there? We'll take it a day at a time. So tune into this video, tune into the channel, guys, because we will be tracking this and cover this moves every single day. Okay, guys, so I'm gonna take you guys down from the daily time frame to the 1 hour time frame, and we're going to make a move here and shutting these guys off, and then we're going to review our wave counts. So you guys already know June 17th marks our low in this count. Okay, so again, anything above this level can be considered bullish. Anything below this level will be considered bearish. Okay, above that we have zones and we have levels to look for to start confirming if this market is going to actually pivot. All right, let's take a look at those levels. So before we get into that, actually, let's just kind of like walk you through our wave count, right? So June 17th marks the low. We hit our wave 1 high. We then pull back in 3 waves down into the A, B, and C of wave 2, right? This wave 2 comes in at the 618% retracement of this wave 1 at 374.03. So that's a good level to hold, right? Should the markets roll over, that is our first level that needs to hold as support. Okay, even though if we start rolling over from here and we go that deep, at that point it is about I put about 80% probability that the markets will keep on rolling over. All right, moving on. So post this wave 2 pullback or the 618, we start getting this rally. Okay, now let's zoom into the 5-minute time frame because we want to dissect all of this information and we want to review the wave count of how I'm labeling the structures. All right, so zooming in into the 15-minute time frame now. This is what I'm looking for, or this is what I'm looking at. Okay, so post our low here on July the 14th, we made our first wave 1. I have the retracement here, and I'm not sure why I shut off, but we made a pretty solid retracement of about 50% from the recent lows. Okay, so 50%. I'm going to delete this again. That came into the wave 2. We now made another wave 1, pull back in 2, holding this line here at the 391.88. This is where we took our trade. This is around that area where we took our trade. We noticed that the wave 2 correction, let me just zoom in here real quick for us. I don't want to block it because my face is right over here, so I don't want to block this area. So we noticed that after we completed this entire rally, we corrected it in 3 waves. Okay, so that's holding so far, or that held so far, and gave us confidence that, you know, it held in the previous wave 4. So this is it, right? So 1, 2, 3, 4, and 5, and then ABC2 support of the previous wave 4, which is a good sign. And then we started ripping from there. So how am I labeling that? This is the wave 2. Now we're into the wave 3 again, right? We're trying to reach this wave 3 at the 407. So if markets continue to progress in this performing this well, it is likely that by tomorrow, beginning of next week, prior to the Fed, we are going to see 400 and SPY again. Now the key is that we hold that level. Okay, now one level to look for here to invalidate, or to start invalidating this, is the break south of 391. If we start breaking south of 391, then, you know, I took a trade today in anticipation of this move. Anything south of 391.88, take the trade off the table, and we'll start to pivot into the bear side, because at that point we haven't, you know, there's an overlap, right? At that point, this impulsive structure now overlaps into its previous correction, which doesn't look good, and it wouldn't be considered an A, B, and C, because then the smaller degree correction will be larger than its parent degree of the higher time frame. So it's not good. It wouldn't be a good look. So we want to see this market keep on ripping higher, and keep on making new highs into the 407.14. That is the ultimate level that I'm looking for. So how does that fall in line here? So that'll be our wave 3 completion of this degree. That comes at play between the zone of resistance. Okay, if you guys can clearly see there, let me just mark this as a box here, or 2 lines, right? You see that the 100 comes in at the lower end of this range, and then we'll see a pullback and then ultimately rip higher into the 1618, which is an extension between wave 1, wave 2. We get equality, we are above equality at that point, so the extended third wave will take us towards the 422 mark, which, if you remember looking at our daily time frame, all right, if we look at our daily time frame at the 100 period moving average, that is around, actually it's the let me see, let me go back to the 1 hour time frame. 422 is our ultimate guide, ultimate target. 422, 413, 434. So it'll fall around that, between those two moving average. At that point, you know, it's looking pretty good for the bulls, right? So let me go back down, let me shut these guys off, and let's get back on track so back down into the 15-minute time frame. So again, let me show you guys what I'm looking for. So ultimately our upside target is at 407. Anything below 391, I will start getting concerned, and anything ultimately below the 362 mark, okay, is considered bearish, and we should be pivoting. All right, now I'm going to transition over into our bear count. So taking us into our bear count, let me shut these guys off. So back up to the 1 hour time frame. You guys already know, if you missed yesterday's video, okay, I reviewed this with you all, and what was that? I'm looking for a zone of resistance between the 394 and 400. Okay, I'm looking for that zone to hold as resistance, so that we can start seeing this market roll over and confirm this ending diagonal scenario. This will fall in line, like right now it's looking a little bit, right, because Snap just reported earnings. Let me take a look real quick here. Give me a second, guys. So Snap just reported earnings, right, and it's down from 17 down to the 11 $12 handle. That's a big move, right? And guess what? If we take a look at Meta, right, it dragged down Meta. If we take a look at pins, right, it dragged down pins. If we take a look at Google, it dragged down Google. This is surprising. This is pretty incredible. Like, that's how does Snapchat drag down these two, like Meta and Google, right? And so because of that, we see that the SPY now is likely to start pulling back. We see that the Qs are likely to start pulling back as well. All right, so maybe because of this sentiment, we see a negative reaction into the markets, which will fall in line with what we've been looking for. So if the C wave completes around this zone and we start rolling over, breaking this first level of defense of 392, which is in the bull count, all right, or this previous wave 2 low, and then ultimately this line over here, then I don't know. I think that this is the case, right? And if the Fed surprises with some sort of other thing out of left field, then the markets will completely catch everybody off guard, because so far the party is about to start and people are getting in late. Because if you're getting, well, not getting late, I think that's pretty bad. I was trying to say people are coming in late to the party, then that's not the case, because we still have, you know, if we're going to use that analogy here, or that comparison, there's still a lot of upside left into this market, and we're just now trying to confirm if in fact this was the low. So I do apologize for that. Erase. I wish I could edit that out, but I'm not going to. All right, so you guys already know what I'm looking for. So a pullback here in the bear count, a push upwards in our bullish count. All right, continuation towards the 422 ultimate region. Okay, guys, so let's take a look at the SMH. Right here over on the SMH, let me reset this chart. Let me go back to our moving averages. You see, you know, a couple of days ago, I mentioned that the SMH was our chart to consider analyzing to potentially see if this market was going to roll over, because back then we were just trading under the 50-day period moving average and we got that red candle and we only had evidence of 3 waves to the upside. So that did not confirm a trend change, right? Because trends do not change in 3 waves. They usually, you know, they correct, right? There's a correction. Oh, let me backtrack. A trend does not end in 3 waves, is what I'm trying to say. So that would not be the low. All right, but because we continue on higher, let me go back down to the 1 hour time frame. We're about to hit the 100 period moving average and ultimately the 200 day. So our upside targets here should be 236 and ultimately the 261. So back over to the 1 hour time frame, it is very, very possible, very possible that this is our wave 1, pull back into 2, our 3, 4, and 5, and we break out of this channel. Okay, you already see that we ended in an ending diagonal, so A, B, and C into the wave 2, right? 1, 2, 3, 4, and 5, and we broke out of here. So if we zoom in further, guys, if we zoom in further, you see that post our wave 5, we broke out into into wave 1. We retested this trend line. Okay, we retested this trend line, acted as support, and then we broke out of here. All right, now we're at the 1618, 232.23. We want to see a pullback. Okay, we want to see a pullback hold the 23.6 and 38.2% retracement. We want to see a pullback hold this zone. And then if you guys are considering a trade, again, not a recommendation, but your stop should be south of this wave 1. So pretty simple setup coming into the SMH here. So we let the wave 3 confirm, pull back into the wave 4, all right, hold above the wave 1, and off we go. Okay, so 219.96 should be your stop if you're considering trading once you see a pullback confirm, because remember, we have to see an A, B, and C. Now this A, B, C can turn into a complex correction. You know, this could turn into a flat, this could turn into a triangle, you know, this could go like this forever, but holding the zone. All right, so if you're holding, you know, just consider time on those contracts if you're considering options. Anyway, so that's what you got to be looking for. After this is complete, this signals us for a completed wave 1. And then we have the larger pullback into the wave 2, likely back into this trendline support or trendline channel rather, and then we off into the wave 3. Okay, so it's just a matter of waiting until we see those type of moves. Over to the triple Q's ETF, same deal, guys. You know, back up to the daily time frame. Let's take a look where we are within the moving averages. I mean, this chart is looking pretty good. Let's turn on our 50 and the 200 day. So we see that we have successfully moved out of the 50 day. We are about to hit the 100 day period moving average, getting into our resistance zone. Okay, we actually broke above it today, and now we're attempting to hit our 315.95 in the triple Qs. All right, again, just like in the SPY, this has been our count, right? 3 waves down into the wave 2. actually invalidation of this entire rally comes in south of 270. So W, X, and Y to the wave 2. And now we're looking to get out of here. All right, so zooming into the 1 hour time frame, turning off our moving averages so we don't clutter our chart. This is exactly what we look for, guys. So wave 1, ABC pulled back into 2, 1, 2, 3, 4. Actually, the third wave kept on going higher. All right, and then we're going to go beyond this zone of resistance. All right, at the top end here at 315, which is the previous resistance, and then we roll over into the wave 4 to then ultimately go back up to the wave 5 of wave 1. This here can be very tricky to track. Okay, this zone here, whatever happens here. So if this is the 4, 5, 4, 5, all right, let it play out, because your move, your big move comes in once this wave 1 completes. And what does that mean? So that means that this whole, excuse me, yeah, here we go. That means this whole rally completes, all right? And then we get the A, B, and C pullback to this wave 2, somewhere above this wave 1, all right? And then this is where we want to start taking positions to the third wave up. Pretty simple. Just be patient, wait for those type of setups, because they will show up. Just be very, very careful. And I think that this might happen coming into the Fed next week. So we'll see what happens. All right, guys. So thank you so much. I hope this was helpful. I'm just trying to map out the possibilities here, and let me know if this helps you. Otherwise, thank you so much for tuning in. I'll see you guys tomorrow. All right, take care. Bye-bye.